soon. Once we start, let's go. Welcome, ladies and gentlemen. This is Cardave out of Empowerment Assets LLC, and then I'll have Mike introduce you to himself and what group he runs. Let's rock and roll, y'all. Got it, Mike? Go ahead, do your thing. Go ahead, Mike. Do your thing. All right. I don't know if Mike dropped out, ladies and gentlemen, but we got Mike at Culture Shock. We gonna rock and roll. Remember, it's teamwork, ladies and gentlemen. We gonna make the dream work. So my whole thing is make sure you guys lock in and ask these questions while we on this live, ladies and gentlemen, and feel free. Remember, in society, we got to continue to keep on growing. We got to continue to keep on evolving, ladies and gentlemen. I'm ready to rock. You ready, OG? Let me know if you guys ready, OG. Let's get this. Let's get this information. Let me know if you ready, OG. All right, OG. Let me know when you ready. I'm ready when OG is ready today. Let's go, OG. Let me know when you're ready. All right, let's rock and roll. OG, you ready? You ready, Johnny? All right, let's get it. All right, let's rock and roll. So, ladies and gentlemen, master class. So we're gonna break down a few things today, ladies and gentlemen. Make sure you guys ask questions. I'm gonna give examples. I'm gonna give you guys 2 or 3 sites that you guys can utilize and use as tools as you guys move forward in this process. Remember, make sure you guys ask these questions while we're going through this presentation. Now, let's rock and roll. Let's rock and roll. I got some information for you guys. So first thing I like to cover, ladies and gentlemen, because this is very important to me as an investor and as a citizen of the United States. I want to know what news is going on around the country so I can better prepare myself to trade the market and also invest in the market, ladies and gentlemen. So the news that we have moving forward this week, ladies and gentlemen, Georgia, the state of Georgia, halted poultry sales. So, you know, that they halted the sale of chicken and things like that because there was an outbreak of bird flu, ladies and gentlemen. So it was an outset of bird flu. So we're going to make sure we got this, right? So, ladies and gentlemen, we're going to make sure that we got this. So, Bezos Blue Origin, he reached orbit for his first try, ladies and gentlemen. I want everybody to give Jeff Bezos a round of applause. So now we got 2 different companies that actually compete. Can anybody tell me the name of the other company that actually competing with Blue Origin? Can anybody tell me? What is the name of the other company that's competing, that's putting satellites into space? Can anybody tell? SpaceX. And who's the owner of SpaceX, ladies and gentlemen?
Elon Musk.
So we got Elon Musk, we got Jeff Bezos, 2 the richest men in the world. Each one of them is worth over $250. They are competing to put satellites in space so they can actually bring forth new technology, right? So different forms of cell phone, different form of communication. So now Vanguard to pay over $106 million over retirement fund violation. Remember what I told you guys, you want to be in control of your 401k, right? If you're not in control of your 401k, you want to talk to them, you want to make sure they make the best decision for your retirement, right? So if they are in violation over retirement fund violation, that means they are investing your funds without you having any knowledge of it, right? So let's say they got a $10 billion fund for investment, and let's say they went all out on the limb, invested 80% of that, and they lost 25% of that. So that's a violation, because my thing is you have to have guidelines in place to make sure that everybody is able to understand what's going on with their money and how to actually manage their money. Now, ETF, Saran calls Raymond Jones to actually invest inside this ETF space. We know that a $15 trillion business, we know there's so much money in the market, ladies and gentlemen. We have to put our hands on what Raymond and Jones, State Street, BlackRock, and Vanguard is putting their money. Now, how U.S. president wield their power with executive order. We want to talk about this for a second, because Donald Trump is going to be taking office tomorrow, ladies and gentlemen. He already got it set that he's going to sign over 100 executive orders on his first day in office. If those are executive orders for crypto, ladies and gentlemen, if that's executive order for rehaul the IRS, we can anticipate the market actually rallying over the next 36, 48 hours and lead into next week as well. So keep your eyes on that. Now, TikTok goes dark on Sunday without the White House clarity. So TikTok went dark. If you guys are a TikTok user, you got people that use TikTok, ladies and gentlemen, we know what happened. They took the app out of the store. You can't access TikTok, ladies and gentlemen. So I think a lot of things has been happening in the background. Either Facebook is going to acquire, either Apple is going to acquire, either Microsoft is going to actually take it up as an acquisition and put it under their umbrella, or they might work out a deal to make sure they can be able to navigate moving forward. Now, Amazon pauses their drone delivery. Have anybody ever seen Amazon do drone delivery? Anybody? I know they was doing it in the state of Texas. Have everybody seen it? Anybody seen it personally? Anybody? Talk to me. Have you guys ever seen a drone delivery from Amazon?
I have not. I have not seen the drone pull up yet.
Yep. So you ain't gonna see it for a while because it was a delivery because it was an aircraft crash in the rain. I want you guys to think about this. Remember, you have to get FAA approval to fly drones, fly planes and things like that. So if we're gonna have mishaps like this, ladies and gentlemen, it's gonna cause residential problems, right? It can cause fire to houses because if a drone falls into our house, it can set a house on fire. So it's a hazardous thing. So they want to make sure they get it under control. Now, video game maker is paying $20 million in FTC kids privacy case. I want you guys to think about what I'm about to tell you. So video game was actually using kids' information to actually advertise to them or advertise to other companies. So if your kids are playing video games, ladies and gentlemen, make sure you keep an eye on what's being advertised to them. So I'm not saying if your kid is playing Grand Theft Auto, you need to watch it. Because if you're allowing your kids to play Grand Theft Auto, you as a parent, you should know what's coming behind that. So if you allow your kids to play Grand Theft Auto, you know that's not a good game for kids to play. Now, Microsoft OpenAI partnership raised antitrust concerns, ladies and gentlemen. This is what I'm going to tell you. Microsoft and Bill Gates have a heavy investment inside OpenAI. I don't think this is good for business, ladies and gentlemen, because my whole thing is this is Microsoft double dipping because they pretty much have some of the same form of what? Technology. I want you guys to think about that. Now, when it comes to a Kaiser Health System, they sent out private patient data to tech giants. So this healthcare company was sending your private information if you have like hepatitis, if you have like HIV, if you have like thyroid problems, if you have heart condition, they were sending your private information to the technology giants, right? So I want you guys to lock in and read more in depth to that so you guys can be up to date. Now, Apple, Amazon, Netflix, they're going to be screaming a live charity concert for the LA fires to actually raise what? Capital. I want you guys to think about what I'm telling you. They are going to be screaming these things, but I want you guys to go behind the scene and see how they're actually donating money to the charity as well. Because these are trillion-dollar companies. They should have the money and the ability to donate to charity instead of screaming an event where other people can donate their money. So keep your eyes locked in on that. If you have family members or friends that was affected by this, ladies and gentlemen, prayers goes out to them. Make sure that we all in a position. If we can't help, we can help. Now, Sony canceled 2 more PlayStation projects. Keep your eyes locked in on that. So Sony say, you know what? The projects are not meeting our expectation. We want to cancel them right now. But they do have the EV electric car coming out. Lock in on that. Now, mortgage rate is at the highest level we've seen in nearly 8 months. So even with interest rate getting cut, mortgage rates are still high. So my thing is people's not going to be buying houses until the interest rate comes down a little bit more. Nobody want to buy 7% and 8% and things like that. People want to be able to buy 6, 6, 5, 4, 3 like that. But those we might not see for a long time. Now, why the government are embracing Bitcoin instead of fighting it off? Can anybody tell me why is the government is embracing Bitcoin and not fighting it off? It's up to you guys. Can you guys explain to me why is the government embracing Bitcoin now? Talk to me, y'all. Why is the government embracing Bitcoin? This is a major topic. I want everybody to chime in on this. Why is the government embracing Bitcoin now as a whole? Can anybody explain to me why? Why is the government embracing Bitcoin? Any ideas? All right? Because my whole thing is we want holders of what? Bitcoin, right? So my thing is they're changing the way currency is actually being delivered to the people and the citizens, not just here in America, but abroad. So governments not just here in America, but governments abroad are adapting what? Bitcoin, because guess what? This is the new way. This is a new form of what? Currency. So keep your eyes on Bitcoin. Keep your eyes on XRP, ladies and gentlemen. Now, the U.S. to hit debt ceiling Tuesday, ladies and gentlemen. We know we got Donald Trump coming in office. We know this is not going to last too long. Pretty much Republicans got control of the House. So we know they're going to, the Senate. So my whole thing is we know they're going to actually raise it or they're going to actually eliminate it over the next 4 years so we can actually run wild. So y'all already know that the United States, States of America is $36 trillion in debt. I want you guys to take a note of that, $36 trillion in debt. So if they're $36 trillion in debt, they got to find ways to actually cut it. And they already said, hey, Social Security is not going to be around the next 15 to 20 years. So what is next, ladies and gentlemen? What are they going to be cutting next to actually what? Balance the book. So keep your eyes on what are they looking to cut from there, right? Now, let's rock and roll. So what I want to talk about first is the history of Fibonacci retracement. Can anybody on here tell me, do they use Fibonacci retracement? Who used Fibonacci retracement, ladies and gentlemen? Who uses it? Talk to me. Who uses it? Nobody used Fibonacci retracement. We're going to talk about this, right? Because this is important as a trader and as an investor. And my thing is, as a human being, you need to understand how numbers work, right? So if you're going to be investing in the stock market, you want to actually have the best tools possible so you can actually utilize these tools to put you in position to be what? Successful as you move forward on your what? Journey. So Fibonacci retracement levels were named after Italian mathematician, right? Leonardo. So my whole thing is I want you guys to know he created Fibonacci retracement based off of mathematic theory. We know that mathematics rules the universe, right? Everything have numbers, right? Everything have numbers, ladies and gentlemen. Anything that you could think about when it comes to number Fibonacci retracement is one of those things that math matters, right? So when it comes to traders, we need to understand how we can utilize Fibonacci retracement, right? So let's talk about this. Fibonacci retracement has been around for noticeably a long time, ladies and gentlemen. It's been around for a long time, right? So an Indian mathematician, he developed the Fibonacci numbers and a method, right? It works off of sequences, ladies and gentlemen. So this is around AD. So just to give you guys a glimpse, math doesn't change, right? Math doesn't change, right? You as a mathematician or a person that's doing math, you evolve to do different forms of math, but math doesn't change. Numbers is key, ladies and gentlemen. Numbers is key. So the origin of Fibonacci retracement is very fascinating, ladies and gentlemen. It's very, very fascinating, right? The base of something that's called the golden ratio. And I want you guys to think about what I'm about to tell you. We got to start off a sequence with 0 and 1, right? And then you keep just adding the prior two numbers to actually string along. So I got a question for you guys. If you guys got 0 and you got 1 and you got 1 plus 1 equals 2, 2 plus 1 equals 3, 3 plus 2 equals 5. So this is numbers that are indefinitely, right? These numbers going to continue to keep on adding up. I have a question for you as a trader. Can you continue to keep on compounding your profit and using the Fibonacci retracement sequences? Yes. Because if you made $5 today and you make $5 tomorrow, that's 10. If you make another 5, that's 15. You make another 5, that's 20. So my thing is numbers is key. As traders, you want to understand how you can actually compound these numbers. And it's going to take you time to actually compound these numbers. Fibonacci retracement levels are derived from this number stream. So my whole thing is we do have sequences. Not every Fibonacci retracement people like to use, but my thing is as a trader, these are the key divine numbers that we like to use. We got 0.61, right? And then we got 0.38, right? And then we got a 50%, which is not a Fibonacci retracement that I like to use, but it just gives me a buffer zone. If we break above the 50%, we know that we can be bullish, right? The trend is changing. If we break below, we know we can be bearish, right? So Fibonacci retracement is based off of sequences, ladies and gentlemen. Either we're going to break Fib levels or we're not going to break Fib levels. So I'm going to give you guys...
Hold on, real quick. With the Fibonacci levels, so y'all get a good understanding and grasp on what these are too. This is a lot of math went into this. So essentially what Cardell was telling us, a lot of smart people put their minds behind this and they understood what the golden ratio does on not just within investing, but the golden ratio can be applied to geometry on a mass scale as far as measuring for buildings, as far as how people set up things to make marketing look proper in the advertisement, make sure things are aligned. A lot of people use the golden ratio to set up those kind of scenes to create that balance to your eyes, because the golden ratio just looks good to the eyes and it's something that it works well with our human system. But it is a real thing, and they did it when they built the pyramids. They used the golden ratio. The golden ratio has been used for a long time. This is just applying it to the stock chart. And what it does, when you pull up a fib levels on your chart, it's automatically going to give you all these levels that he's talking about. So you're not going to have to look for the 0.6, 0.618, the 0.5. It's going to come up on the fib as you pull it up on your chart. Now it's going to come up and it's going to give you certain price levels to look for. And those price levels where he's talking about, he doesn't like the 50% level. That means that when it comes down or you have a 50% fib level, that it hits that level on that chart when you expand it, there's certain levels that come up that people trade off of. And most people like trading off, like you said, the 0.618 level, the 0.5, and the 0.382. Once it gets outside of those ranges, you're starting to look at overextension or over retracement starts to happen past those levels. So once you get the fib chart, I'm sure we're going to show you on TradingView. We're going to pull up a chart and stretch out the fib and show you how it's going to look But once you have that up, it's giving you now solid price levels that you can trade off of or take profit off of.
Which makes sense. So, ladies and gentlemen, so Fibonacci retracement is used in every form of mathematics and every form of society, right? So we have to understand why we are using Fibonacci retracement, right? It's just a tool as a trader to put us in position to be successful, right? Once you master it, it's just another tool in your toolbox. Now, I'm not saying it's the best tool. I'm not saying it's the only tool, but it's just a tool that you can actually utilize as a trader and also as an investor to actually make accurate decisions based off of mathematics. All right. Now, why Fibonacci retracement levels key, ladies and gentlemen? Right. We already know it stems to sequences, horizontal lines indicate what support and resistance are. Right. So we back to the basic. Fibonacci retracement can show you support and resistance as traders. And then Mike, we're gonna go line for line. He's gonna read the next one, and we're gonna break it down as a team. Y'all listen closely. Let's go, Mike.
Fibonacci retracement levels. Stemming from the Fibonacci sequence are horizontal lines that indicate where support and resistance are likely to occur.
Now, explain to the people what do that mean in terms that they can understand and they can apply this.
So the support level, if you enter a trade, your support level is going to be the level that you're looking at and saying that, all right, as long as the price doesn't go below this level, I will stay in this trade. That's considered your support level. And then the resistance level will be the price level that you see on the Fibonacci, the next line up where it says, okay, this is another line where action is going to happen. It's either going to be your take profit or you're going to see resistance there and the price is going to start to reject a little bit before it's able to break through. It's going to be like a wall. Think of it like a wall. Some walls are thicker than others. And when that bar punches the wall, did it punch it hard enough to break through and stay through or no? Did the wall reject it? Sometimes the wall rejects it and it pushes it all the way back down. Or sometimes it pushes and breaks right through and goes to the next level, to the next Fibonacci level. So that's support and resistance right there.
Makes sense. So my whole thing is understand support and resistance is a key element as a trader, because at the end of the day, you need to know if the house has a roof. You need to know if the house have a floor, right? Because my thing is, without these elements, you are not inside of a house, right? You might as well stay outside because rain gets in, right? Animals can get in, they can come in because you don't have a floor that's actually secure and that's protected. So the stock market works the same way. We need a resistance and we need a support, right? So we can trade in between or we can trade from resistance to support. Now, each level is associated with a percentage, ladies and gentlemen. We're talking about Fib, the percentage on how much a prior move the price have retraced. So Fibonacci retracement levels are 23.6, 38.2, 61.8, 78.6. While not officially a Fibonacci retracement level is 50%. So basically what this is telling me, ladies and gentlemen, if we retrace it from the 23.6 back to the 38.2, we get into an uptrend. If we continue to keep on retracing to 61, we in an uptrend, and vice versa. If we flip the Fibonacci retracement going to the downside. Now, is a key level in between, ladies and gentlemen. It's not technically a Fibonacci retracement level, it's the 50%. So if we're retracing from the bottom and we break the 50%, ladies and gentlemen, we can say, hey, we classify this as a bullish trend. But if we break the 50% going to the downside, we can classify this as a what? Bearish trend. Go for it, Mike.
So when you're looking at a bearish trend, suppose you have a pullback going on. A bearish trend will start to have effect in when you see that starting to hold and that uptrend is not coming back. So those resistance levels we talked about, they're starting to show as, okay, this is showing that these levels are not being able to be broken by the market within this time frame. So what that will create a downtrend, and you'll keep seeing the market try to test that higher level and then get rejected, go below the support level we're talking about. So now those support levels that you're supposed to be bouncing off of and coming back up off of, you're not bouncing anymore. You're breaking down through them, and you're now starting to create a bearish trend, and you're starting to break down through Fibonacci levels. And once you start seeing yourself break down through 1, 2 Fibonacci levels, then you're starting to see yourself enter a short-term bearish trend, depending on what time frame you're looking at.
Right, that makes sense. That makes sense. That's a key indicator, the time frame. So my whole thing is I got a few traders in my group, they like to swing loans, right? They like, 1 week, 3 weeks, 3 months, 4 weeks, and leave contracts. So time frames is very important when it comes to Fibonacci retracement. If you're scalping, swinging, doing leaps, or even buying long-term shares. Now, we got an example, ladies and gentlemen. So suppose that the price rise to 10 to 15, right? And these two price levels are the points used to draw what? Retracement indicated in. 23% level would be 1382. So my whole thing is now we got a 50% level in between, which would be 1250. So my thing is, if we retrace it above this, we know we completely still what? Going into an uptrend. If we trace below, we know that we bearish and we going into what? A downtrend. So when you trace these Fibonacci traces between these two zones, we know that we got our Fibonacci tracement to the upside or our Fibonacci tracement to the downside, and we can place trades depending on which Fibonacci level we break into the upside or to the downside. So all of this puts you in position to be successful as a trader. Now let's rock and roll, ladies and gentlemen. So now, using EMAs with Fibonacci retracement, I'm gonna have Michael explain to you guys what EMA is and how we use them, and then we're gonna go back and forth.
So EMAs, you'll hear this a lot. They use this a lot when they're talking on the stock channels. You know, CNBC. You look at what is it? Al Jazeera. I watch some of their economic channels as well. But what you're on Bloomberg, what you're hearing is they're talking about the moving averages for the stock over a certain period of days. So a lot of people use, 50-day moving average, 200-day moving average, and 10-day moving average, depending on what you're trading. And those moving averages give you, like I said, the average stock price for that time frame. So if it's a 50-day moving average, it's going to be the price average for those last 50 days. If it's going to be a 200-day moving average, it's going to give you the price average over 200 days. Now, the thing we know about the market is that the longer the time frame, the stronger the level is a lot of the time. So if you got a 200-day moving average, that's going to give you stronger support or resistance than 10-day moving average, or your 50-day moving average even. But your 50-day moving average is going to be stronger than your 10-day moving average. So when you got those lines and they're color coordinated based on those time frames, you know, like, oh shit, we're coming up on a 200-day moving average and it's about to be a resistance level. Maybe we're going to hit hard resistance right here. So let me be careful with my trade and let me see if we hit resistance. Or you could say, I'm going to jump in my trade after we break this 200-day resistance because I see it's 200-day resistance. And if we break that, that must be a good sign that we're getting ready to do a nice little push in the market. So let me jump in after that 200-day moving average is broken. Right. So you can use it for those ways.
Right, and I like that. That's a great way to actually express that and actually deliver that to the people. So when it comes to EMA, using Fibonacci retracement, no matter if we above the EMA, we can use Fibonacci retracement going to the upside. If we below the EMA, we can use Fibonacci retracement going to the downside. Some of my favorite EMAs when I'm scalping or swing trading for a week or 2 weeks, I actually like to use the 3, the 5, the 9, and the 21. Now, for long term, you can write this down. I like to use EMA the 50, the 200, and I like to use 505, right, or 5010. Y'all got that? So that put me in position to understand how the stock was moving over the last two trading calendar years. So I want to know if we're in an uptrend, we're in a downtrend. I want to know if I should be able to swing this. I want to know if I should be able to put myself in position to be successful. Now, 3, 5, and 9, we got a 21. You guys can clearly see this is 5. We clearly above the 3, the 5, the 9, and the 21. So we're in a complete uptrend. So this is completely what? Bullish, ladies and gentlemen. So we have to understand this is our opportunity to take full advantage of the market. So use the Fibonacci trace and the EMAs. Now let's get to some meat and potatoes today, ladies and gentlemen. What I want to talk about is the option chain, man. Please, ladies and gentlemen, because I get these questions all the time. What is the option chain? How I utilize the option chain to put me in position to be successful. Remember, ladies and gentlemen, we are live on YouTube at Empowerment Assets. Lock in, so you guys can see the PDF. Mike, let's go back and forth. Let's explain the option chain, right, in greater detail so people can actually use this and maneuver a little bit differently, right? For the people that already know what an option chain is, let's break this down. Let's make sure everybody have an understanding on how to place an order, but actually how to read an option chain. Let's go, Mike.
Option chain. This is a screen you're going to spend most of your time looking at if you're trading options. So you're going to become very familiar with this order screen because this is where you're placing your orders from essentially. And I'm going to read just the textbook definition and I'll give you a breakdown a little bit. An option chain displays all available option contracts for security organized by expiration date and strike price. Option chains typically show each contract's bid price, which is what the people who are buying it trying to buy it for, and then the ask price, which is what the people who are trying to sell it, what they're trying to sell it for. Not all the time. Well, most of the time, those two prices never align. When you go to a store, are you ever buying the product at the exact price you want to buy them at? Probably not. So you're meeting the seller at a midpoint somewhere where you guys are going to come to agreement and say, okay, I'll buy it at this price, and they're saying, okay, I'm willing to sell it at this price.
So you basically saying
Bid in the ask price.
so you basically saying the option chain is based on an agreement platform,
Right.
where you agree on price. Okay, so that makes sense, ladies and gentlemen. Is an agreement platform, right? We got to make sure that we do agreements. Let's go, Mike. Keep it going.
So after that, you're going to start seeing the strike prices in the middle. A lot of the times, most platforms have the calls organized to the left, puts to the right, depending on how you have your platform set up. But you can have it set up in a way where you only have calls on your screen or you only have puts on your screen. That's completely up to you. But most of the times, it's calls on the left, puts on the right. And then it's going to give you a certain kind of information on those calls and puts. It's going to tell you how much volume is on the call or the put, which is telling you how many people are actively trading that call or put contract at the time. Then it's going to tell you what the ask and bid price are, like we just discussed. Then it's going to tell you what the theta is and the delta is, what we discussed last week as far as the Greeks. So that's why all this information is relevant, because you pull it all together and it gives you an idea how to analyze and understand what you're looking at when you even come to the option trading screen. So if you don't understand what an ask and bid is, you're not going to know how much to offer for an option contract. You'll go in there and you'll probably buy everything at the ask price because you don't understand that you could get it for a little bit cheaper. Maybe the spread between the ask and the bid, they may be wanting $100. The people who are asking for it, people to buy it, want to sell it for $100, and the people trying to buy it are trying to buy it for $50. And you coming in buying it for $100, and you could have got it at $75. You're automatically starting off your investment or trade 25 down because you didn't get it at the best price, because you didn't understand the ask and the bid and how to put yourself in between to strike that best price. You know, so that's a basic breakdown. Go ahead, Cardiff. You can go ahead, keep breaking it.
So when I'm looking at the option chain, ladies and gentlemen, I'm looking at it as a menu, right? So when you guys go, let's say you guys go to Five Guys, you guys go to McDonald's and Wendy's, let's say you guys go to Pizza, any place that has a digital menu, you already know that they have entrees, you know that they have sides and they have drinks. So my whole thing is, you know that if you're going to get a double cheeseburger, it's $12 and a single cheeseburger is $9, you got a spread. So my thing is, do you want more meat or you want less meat? So in the stock market, if you want to get closer or in the money, right, or at the money, the price is going to be different and the option chain is going to reflect that. So when I'm looking at the option chain, ladies and gentlemen, I'm looking at multiple things like we explained last week. I'm looking at the bid, I'm looking at the ask, I'm looking at the open interest, I'm looking at the volume, and I'm making sure that I get a strike price that makes sense for me. Y'all follow me? And I'm making sure that the expiration date makes sense, right? So if you guys are day trading or scalping, expiration date doesn't mean anything to you because you're looking to get in and out of this trade. But if you're looking to swing, you're looking to do leaps, expiration date is very important because you want to have the time and you want to put yourself in position. So I got a phrase that I always use. I'd rather have the time and not need it and need the time and not have it. Basically what I'm saying is it's okay to buy more time on trades, right? Just in case you need it, but if you don't need it in the process, ladies and gentlemen, you can actually exit that position when you feel comfortable when you are in profit. So if you guys look at this option chain, we got strike price all the way from 160 to 200. The cheapest contract is 200 because these 200 contract is all the way out of money. The more expensive contract is 160. But I want you guys to analyze the option chain. If you guys look at the open interest on all of these contracts, none of them really make sense, right? Because only one that have the decent open interest is the 190, but the volume is 85, and the one that have the decent volume is 195, which has a volume of 2,329, right? So I would take this trade on this ticker. Let's say this ticker is IWM or something like that, BBA. So my whole thing is I don't have a lot of volume, right? Banks doesn't like it. Retail investors doesn't like it. So guess what? I don't trade this. I wash my hands with it. So when you guys are analyzing the option chain, ladies and gentlemen, make sure that you're picking a ticker or ETF that has heavy volume, heavy open interest, right? And make sure that the bid and the spread is pretty tight. You don't want to bid in the spread that's $60, $70 a spread, so you instantly get into the trade, you're losing money right away. We don't want to do those things, ladies and gentlemen. We want to make sure that we are in the right trade, right? There's no such thing as the perfect trade because you can get into a perfect setup and still lose, right? So make sure that your bid and your ask is the spread is really close, ladies and gentlemen. Let's go
I got
for
an
it.
example here. Let me can I share my screen? Is my screen able to be shared?
Yeah, it's gonna knock you out. We're gonna go to the option chain, Mike. We're gonna go
Okay,
to
okay,
the
okay. Cool, cool.
all right. So now order flow, Mike. Let's talk about this as a team. We're gonna break it down. We're gonna go to some option chain today. Order flow. Go for it, Mike. What
So
do you
order
think that
flow,
matters the most?
so order flow is the trading analysis that buy and sell order products. I mean, sell order predicts price movements. It's based on the idea that price is driven by the interaction of supply and demand. How it works: analyze orders. Order flow trading looks at the size, timing, and location of orders as they are placed. Identify areas of interest. Trader looks for areas of interest by strong buying or selling pressure and anticipating price changes by these order flow. So order flow, a lot of the times, will tell you what is happening live on the options chain, like how people are buying and selling live right in front of you. Now, some platforms actually to pay for a premium order flow because that's how powerful this tool can be. You can end up seeing some orders come in, and let's say you could see somebody sell 2 million shares of Apple or 2 million contracts on Apple, and as you see that coming in, you're looking at, oh man, I should jump into a put right now because I just saw this coming on the order flow. It may not have fully hit the market yet because you saw it on the order flow, and you place your order in time. Now you're catching that move that's coming in. So you kind of anticipated the move based on what you saw happen on the order flow before everyone else got the news and saw it actually happen live on the chart. So that's where order
So
flow
order,
comes in.
yeah, and what Mike said, order flow is very important, ladies and gentlemen. You are seeing those live orders. I mean, you have to pay for the information to be able to play the game, right? It's going to cost you, right? Sometimes the cost is expensive, but on the other side of paying expensive price for things, you get a very, very quality return, right? So order flow, you have to pay for this. One thing I like to pay is Bull Flow. It's very good. It's unique. It's $29 a month. You can utilize it. You can see the live flow while you're currently trading. But I want you guys to really think about what order flow is. Y'all ready for this? Let's say me and you, we say, hey, we're gonna go to, let's say, Walmart. And let's say we were looking for the PS5 when it came out, right? So let's analyze it. So if they only made, let's say, a million PS5, the order flow for that the first day, let's say 989,000 was bought. So we know this is a high ticket what? Product. So guess what? We want to be able to get our hands on this because we know that it's going to sell out. And if we are looking to actually play it, or let's say we're looking to make this as an investment, we can literally buy it, right? For 500, if people still want it because they only made a million, we can actually double or triple that. So when you're looking at the order flow, you're looking at that order coming in, it's going to drive the price up or it's going to drive the price down because it depends on if the order flow is bullish or the order flow is what? Bearish. Now we got different ways that order flow can actually be interpreted, right? And we're going to talk about it, ladies and gentlemen. Please lock in, listen, ask these questions because somebody said they didn't never understand, they never heard of these terms. Sweeps versus block order. Let's talk about this, Mike, right? Let's talk about the definition, and then we're going to go back and forward and make sure that we give the people an honest opinion and make sure they got an honest understanding about time this PDF is over with. Let's go.
Right. Block trade is privately negotiated transactions with variables such as shares and position balancing at play. A sweep trade is an aggressive transaction broken up and sent across multiple exchanges. So sweeps are crucial to retail traders because of what their presence indicates. When an institution has directional belief in an underlying stock and wishes to position themselves in the trade as quickly as possible, they send a large order into a market, and that creates a sweep. So when you see a sweep order come in, you got to make sure that, especially if it's on a stock you watch, you want to see where the order came from. You're looking at the amount, and that gives you a good indicator that that's the direction that that particular institution believes the stock is going in. And sometimes institutions put in multiple sweep orders because they have such a large amount of capital to deploy. They got to put them in pieces. So you'll see the first sweep come in and you'll be like, huh, that was interesting. And then a week later, you'll see, boom, another sweep order come in. You'll be like, oh, they did it again. And then you'll see like 3 weeks later, they'll put another sweep order because that's how they have to purchase their stock. Like we could purchase our stocks all at once whenever we need it. They have to do it in waves sometimes because they got to get approval from the board. They got to go through a lot of different stuff to get into these orders. And so they'll get in on those sweeps, and those sweeps are your heads up to say, oh man, institutional money is buying in this particular company or industry. I need to get in now before the rest of their sweep orders come through, you know? So then you got order blocks after that. Order blocks, go ahead, Carl, you break down the order block.
So now order blocks to me is very important to me, ladies and gentlemen. When I'm trading sweep and order blocks, I'm looking at these blocks. So let me break this down in layman's terms after I actually give you guys a quality background on what order blocks is. Well, sweeps are broken up into multiple trades. Order blocks is just that stamp of approval. We buying 1 million shares right now. We buying 1 million call options, right? We put in 1 million future trades, right? Because my whole thing is they're aggressive. So once you see an order block, ladies and gentlemen, just let you know that the banks and the institutions are feeling what? Very what? Positive. That is going to head into this what? Direction. So guess what? They're placing their order blocks. And then my thing is you might not have time to follow the banks when you see these order blocks, or you might have time. So my thing is you have to pay for the information to see where the order blocks is placed and where the sweeps is being placed. So watch what I'm about to tell you. Blocks are single transaction. Sometimes these prices are privately negotiated. So sometimes we can't see them right until it's too late and we see a large order block. 10,000 contracts is bought on spot. 25,000 contracts is bought on spot. You say, wow, what's going on? Now, when we're talking about order blocks, only institution can do order block trading. Retail investors, we cannot change the way the stock market is actually priced in. So institutions say, you know what? We like this Apple, right, at 120. So they do a large order block for, let's say, 30 million, 20 million, 20 million. They bought all of these shares. So guess what? We know that if they're doing order blocks and they buy a share at this price, they know the shares can actually what? Increase. So this is your opportunity to say, damn, is an order block on spot for 590 call for next week? Why do we have 300,000 contracts that's being bought? That's the institutions, ladies and gentlemen. They are driving the price into one direction, right? So make sure you guys understand that transaction is agreed upon, though, between the institution and market makers, right? Based on liquidity needs of the market. Now, I have a question for everybody. Let's see if everybody can actually answer this question. Can anybody tell me what is one of the biggest market makers in the world or in the United States? What is one of the biggest market makers?
Type it in the chat. If you don't want to answer out loud, type it in the chat.
Type it in the chat or answer out loud. What is one of the biggest market makers? You need to understand who is executing your transactions, right? And how they are getting paid from your transaction, ladies and gentlemen. When you hit that buy or that sell button, somebody is getting paid, cha-ching, right? You getting paid, somebody else is getting paid to actually what? Facilitate that what? Transaction. Can anybody tell me?
Coach, I don't know who currently do it, but I know Bernie Madoff was one of the biggest market makers at one point.
And what happened to Bernie Madoff when he was doing it?
He made a lot of money.
Right? So my whole thing is, guess who's on the list? Citadel. Can anybody tell me who is the CEO of Citadel? Type it in the chat. Say it out loud. Who is the CEO of Citadel? Put it in the chat. Remember, you need to know who these market makers are so you can be able to make what? Money, and understand how they are making money off of you as an investor and as a trader, right? Market makers. Remember, institution and market makers agree, right? Agree, ladies and gentlemen. They have to agree upon what the liquidity needs to take place. Pay close attention. Now, at first glance, block orders appear to be what? Pinnacle or aggressive transaction, right? We know that it's aggressive, right? But my whole thing is that it might not be aggressive like you really think it is. Let's say Warren Buffett has, let's say $500 million in cash, right? He want to buy a company. Let's say he do an order block for 30 million, right? But he really want to put 150, so he continue to keep on putting order blocks for 30 million. Order blocks for 30 million. He's not really being aggressive, because if he really wanted to be super aggressive, he would put an order block in for 150 million, 60 million, 90 million, right? So my whole 90 billion, right? So my whole thing is pay close attention to how the order blocks is being placed and where are they being placed and who are placing these order blocks. So it's so much information that you can buy that can put you in position to be successful. Y'all got it? Now, this is something I want you to think about. You will often notice order blocks are deep in the money, or they are very far out of the money. Now, can anybody explain to me, why would you buy deep order blocks in the money. Can anybody explain that to me? Think about it. If you would spend $30 million on in the money contracts, why? Can anybody explain to me as a trader? Why would you spend $30 million on in the money contracts? Can anybody explain this to me? This is important.
You just need a little move.
A small movement and you get paid a large amount of what? Money. Can anybody tell me who was the Speaker of the House that always placed in the money contracts? Anybody? What was the Speaker of the House? Always placed in the money contracts.
Nancy Pelosi.
Nancy Pelosi. So if
famous Nancy, man.
Nancy Pelosi placed in the money contracts because guess what? She wanted to be able to be what? Get paid fast, right? Or she wanted to exercise the contracts because guess what? She made money off them increasing in volume. She took the shares away and she still is going to make large amounts of money over time. Now, can anybody explain to me why would you place an order block on out of the money contracts? Now, to me, this is my favorite.
Yeah, these are the setups right here.
You turn a little into a lot.
A little into a lot, right? Because guess what? If you know that SPY dropped down to 574 and you get 590 for 3 months out, you added a month. Now, oh, SPY's not going to move $26. Go look at the charts. So you just turned 1 million, right? Essentially, and let's say you made 3,000%. How much money did you make? You turned a little bit into a whole lot. So sometimes it makes sense to do OTM contracts instead of doing ITM contracts, right? You spend a little to make a lot. This is a major move as a trader, and as you move forward as a trader, ladies and gentlemen, you want to be able to distinguish between ITM, OTM, or ATM. But in this instance, they do an order, major order, right? Block orders at in the money or out of the money. Now, however, these orders are privately negotiated, meaning they can't be said with confidence if the intentions is behind this trade. Bullshit. Ain't nobody putting $1 billion on a trade and looking to lose $1 billion. Don't believe that.
Don't ever believe that.
That's inside.
What happens is too, you get these private trades happening, and that's where you got to look at with these large institutions. That's why it's important to follow up on their 13F filings. So every quarter, they can only keep it hidden. They can only keep this stuff out of public knowledge for so long. So every quarter, every 3 months, they got to reveal what moves they made. So they couldn't do block orders. They could do a whole bunch of block orders within the quarter. At the end of that quarter, when they got to talk about that 13F filing, you're going to see everything that they did on a 13F, how much more they added in shares, how much they sold out of some shares. So that's what you want to look for in those 13F filings. Those are going to give you the inside look on how many block orders like a Berkshire Hathaway may have done last quarter when everybody was going crazy. Oh my God, it didn't come out until the 13F filing come out, but I'm pretty sure Berkshire Hathaway sold those Apple shares long before, long early into the quarter. So they talking about, Berkshire Hathaway sold $400 million in Apple shares, or this is going to cause Apple to crash. Why would they do that? A lot of the times we're getting that information late because we're getting that information after 13F filings are revealed to the public. Warren Buffett, no, he did that 2 months ago. So that's what we got to understand when we're getting this information. A lot of the times when you're getting block information, it's delayed information. So now you got to anticipate and say, all right, if this happened 2 months ago, where would they be seeing it going in the next 3 months? Not so much so I'm getting information now and I got to react off of this now. So if you react off of Warren Buffett selling 400 million shares of Apple right when it happened, and you go into selling Apple, and then now Apple's hitting all-time highs, you're going to look crazy because you're not timing or aligning the movement properly, and you got to look into the news as to why he sold it, the timing, is it still the largest holding in his portfolio, which it is. So once you get all that information now, you say, okay, well, he sold 400 million, but it's still the largest holding in his portfolio. He's probably just looking to diversify into some other fields or go heavier into the capital for a particular reason. That doesn't mean Apple is going to tank as a stock, you know, but a lot of people take that as a signal. Oh man, that news comes out, Apple must be getting ready to tank, and you start selling off, and then Apple starts going up.
Right, which makes sense. And then to dig and dive and to give people a insight on that, pay close attention. If Warren Buffett is selling hundreds of millions of shares of Apple, who is he selling to? Who have that capability of buying those shares? BlackRock, Vanguard, State Street, and Apple itself, right? Apple did the biggest buyback in their history when we seen that Warren Buffett was selling his what? Shares. But guess what? This is called company buybacks. Now, breaking news. TikTok is back online for some users, ladies and gentlemen. So a lot of people can get on TikTok, ladies and gentlemen. So breaking news. So my thing is
breaking news. TikTok is back. That's crazy.
Yeah, so keep your eyes locked in on that. We don't know the ins and out of it, but we're gonna keep our eyes locked in. Now, I want to cover one thing. I know we have Kels on here. She wanted to introduce a video to the group, but I just want to let people know what fair volume gaps is. They can dig and dive in a little bit more, and I send a video out to her. From her to the group and to the team. So we know fair volume gaps. I'm not going to dig in too much to it. I just want to introduce to it, and you guys can watch the video as we move forward. So in ITC world, fair volume gaps is a 3 candlestick structure, where it indicate a gap between the high and a gap between the low. So the first and the third candle. Now, the gap between these 3 candles is created because price did not retrace in that area and leaves an opening, right? Now, you can see the example. Right, you see the examples between the candles. Y'all understand that we got 3 candles. The second candle is always the biggest candle, right? So it's the most candle to have the most momentum. So the second candle is telling you a story, right? It's basically painting you a picture, right? So the larger the candle, the less of the wick, the more buying or the more what? Selling. So my thing is in fair volume gaps, we either can have a bullish fair volume gap or we can have a bearish fair volume gap. So I'm going to post a video and we'll talk about that a little bit more, ladies and gentlemen. I just want to introduce you guys to this. I don't want to just ring it on you guys inside the group because I know a lot of people is not studying fair volume gaps, right, at this moment. All right, but it's a quality thing that you can use. If it helps you, use it. Now, I want to talk about 2 companies today, right, ladies and gentlemen. I want to talk about 2 companies today. This is very important. Now, Pepsi hurt small business. Can anybody tell me what you think that means? Pepsi hurt small business. Anybody tell me? What do you guys really think that means? This is important. Pepsi hurt small business. What do you guys really think that means? What do you guys think that means, ladies and gentlemen? Put it in the chat, say it out loud. This is important. Because I'm pretty sure you eat some of Pepsi products, right? If you don't drink their sodas, I'm pretty sure you had a Dorito, a Cheeto, a Tostita, a Lay, a Ruffle. You probably had Quaker Oats.
I think that means they charging too much. Doritos not supposed to be $1 for a bag.
I mean, some form, OG. Now, I like that. OG is chiming in. All right. This is what that means. Pepsi is showing favoritism, OG, to Walmart, big companies, Target, and things like that, right? Hey, if you guys continue to keep on buying our products in bulk, we're going to make sure that we do the advertisement and things for you, right? We want to make sure that you stand out, right? We're not going to give a high level of quality to smaller business because we want to put the smaller business out of what? Business. Now, the Federal Trade Commission, right? On Friday, they sued Pepsi. They was engaging in illegal price discrimination. So guess what? They was telling Walmart, hey, the price of your chips, you can sell them for cheap. But this store, you got to sell them for more what? More money. So guess what? They're not going to be making more money because people are going to be like, I'd rather go to what? Walmart to buy my Pepsi or my Doritos or my Gatorade or guess what? My Aquafina. So this is a legal practice, ladies and gentlemen. This is very illegal, right? So you're basically trying to create a monopoly, right? You say, you know what? If you don't buy by my rules, right? You don't do the I tell you, guess what's going to happen to you? You're going to lose out on money. So the FCC say, you know what? We're not buying this. We're going to sue you. We're going to take you to court. You're going to have to pay a fine and a fee. But now, this is great business practice, right? But on the other end, ladies and gentlemen, we got to understand that it's crippling small business because it's going to force all of us to buy from big chains. Y'all got that? It's going to force us to buy from big chains. So they redacted a statement from commission to receive unfair prices. So now, advantages, they were not made available to others, right? So guess what? Let's say we're not going to make this price available to you. You want to sell 1,000 units. Walmart sells 1 million. No, that's not fair practice. Even if I sell 1 unit and you sell 1 million units, we all should be in position to be able to understand that we should have a quality price to be able to sell to our consumers. Y'all following me?
Right.
All right, now, this is a disadvantage to smaller business because guess what? They don't have the resources or lawyers to actually what? Go up against Pepsi because Pepsi is a what? Conglomerate. So guess what? They say, you know what? We're going to let the FCC do our dirty work. Got it? So they giving massive retailers like Walmart and Target a leg up on the smaller what? Business owners. Y'all got that? So it's out.
What do y'all think that does ultimately to our economy?
Yes, that's a great question. Yeah, go for it.
Eventually do. And what do you see happening before your eyes right now as this continues to perpetuate? Where's the money going? And where's the money leaving?
Yeah, think about that. So the money is
the middle class is disappearing. The middle class is disappearing. There's no such thing as middle class anymore. You're hearing that argument now. You're either rich or you're poor.
Right?
That's really where it's going.
Right.
And because of stuff like this going on with Pepsi and larger retailers starting to do things where it can be seen as legal capitalist practices, but then we also know once you get up to a certain level of scale and income, when you're dealing with now billions of dollars, you're starting to get certain kind of favoritism and deals from suppliers that the average small business is not going to get. And of course, we also know buying more, you get stuff cheaper, but it's not about buying more, getting stuff cheaper. It's more so like I could buy the same amount as you, but you're still getting it cheaper because you're Walmart and I'm a small business.
Right.
So that's where the problem comes in a lot of the time. If you buy 1,000 and I buy 1,000 units, we should be paying the same price. I shouldn't be paying more because I'm a small business and you're paying less because you're Walmart. I mean, you're Pepsi and you got advertising partnerships. All those should be considered separate things. But now it's all infiltrating the supply chain. And when the supply chain gets infiltrated by people paying for advertising dollars or using ad dollars to influence the retailers, what that does is gives them an unfair advantage. And now they're starting to coerce these deals where, all right, we'll give you a certain amount of advertising and shelf spacing in exchange for this kind of discount on the product. And all this kind of stuff starts happening. And these deals aren't able to be afforded to these small companies who don't even have the ability to do the advertising on that scale. The only solution would be to separate the advertising contracts from the retail contracts and not have them be able to be conjoined in any kind of way where you're creating some kind of discount for the suppliers based on an advertising contract you gave them. And a small business could never do that, you know, especially not on that scale.
Right. Negotiation is key, but my whole thing is inside trading. And my thing is that given so much advantage to Walmart and these big retailers, because they know Walmart is going to sell a large quantity, so they know that money is going to continue to keep on trickling in. They want to satisfy Walmart, right? So a lot of these big businesses need to understand that, hey, we're going to put small business out of business, and they don't really care. Because my whole thing is we can use Kmart, for example, right? We can use local companies, for example, right? Because we in Publix, we got Publix, we got Winn-Dixie. Winn-Dixie just got bought out by Aldi. So I'm trying to explain this to you. There's no such thing as middle class as we continue to keep on moving forward. Either you have some cash, you have some money, you have some wealth, or you don't, or you're trying to build it, right? Now, I don't want you guys to let this go over your head. These are some of the products that Pepsi actually owns, ladies and gentlemen. This can't go over your head, ladies and gentlemen. How many times have you used these products?
Right. I had no idea Pepsi owned Tostitos, man.
Right. The cheese, everything, right? So I want you guys to understand, you can get you some oatmeal, you can get you some electric light, you can get you some tea, some chips. I want you guys to think about this. So if you guys want to keep eating and consuming these products, why would you not want to own these products?
And at the same time, keep your eye on this kind of news that's coming out, because if you're doing the option trading, which we're focusing teaching you today, this kind of news is going to impact your contract price, your contract value. So when you see something like this comes out, you may see a shock value on Pepsi, and when the price starts to drop, now you want to look at put contracts and you're going to line that up with your Fibonacci chart, and now you're going to go to work. So I call that doing the homework. So you got to do the homework now. This is a fundamental analysis. So you get news, this will be considered fundamental analysis. And you want to combine that with now your technical analysis, which is your chart work. And you go to your chart now, oh shit, Pepsi got this news coming out. Today is Sunday. Maybe this came out on Friday over the weekend. We could get some price action Monday off of this. Let's go ahead, open our fib. Let's get our price levels. Let's see our EMAs. Let's see if we're around any kind of price level of the fib and the EMA meeting each other. That may be a really good point to get in on a call or a put. So go ahead, Courtney.
Go, Court. Go ahead, ask your question. All right, so when Courtney had a question, he could just come on and ask it. But I want you guys to really lock in on this Pepsi. It can actually, this news can actually hurt your option contracts. or it can actually put you in a position, if it was good news, to help your contract. But I'm coming from a different approach as well, since we here. If you're going to consume these products, own this brand.
Coach,
Right?
my question was, so most of those small businesses tend to run out of business?
Yep, they run them out of business or they buy them out.
Oh, okay,
Yeah.
they buy them out.
Yeah, because down in my area, I live in Florida, right? In South Florida, what I notice is different from where I'm from in New York, is that Walmart, the Targets, the big box stores, they run a lot of the market down here, the retail market. In New York, because a lot of the zoning laws and how the city is set up and old zoning laws have been put in for way back before a lot of this commercialization of retailing mega giants took off, a lot of that zoning helps protect the small businesses from being invaded by big Walmarts coming into their neighborhoods and Targets. But down here in Florida, you got so many super Walmarts and Targets that it's hard for a small business to survive in this climate, because how are you going to compete with these large box stores, and you're a corner store, but the Walmart is right next door to you? Where people are going to go?
That's a fact.
No. Go ahead,
Go ahead, Miss Abraham.
I guess to Mike's point, I'm up in New York, so like his point is spot on about the differences in businesses. But my question is more so to the competitive base or the competitive retailers. So y'all mentioned Pepsi, and I look at companies like, I'm in marketing, so I look at companies like Nabisco, which is in the corner store right around the corner, but I won't see Pepsi products. So what is y'all take on that?
So what happens is it's all about negotiation, right? And geographical location, right? What product is more popular in that area, right? So you might go to some places like restaurants. 9 times out of 10, you might see just the Coca-Cola products, right, for that area, right? It's all about negotiation and what the people are actually asking for, right? So let's say if I go to Little Haiti, and let's say Haiti, people from Haiti, all they are think about is Pepsi products, right? So in their area, they're gonna demand that nothing but what? Pepsi products, right? Because they're negotiating it, because they own the stores in that area in Little Haiti. We're gonna talk to Pepsi directly. We don't want any Coca-Cola products. So my thing is all about negotiation and what the people want in that area. Got it?
And that's where those small markets are important, because when you have more small market, niche markets, a lot of small producers can infiltrate those markets, because those are so small brands that certain cultures and communities are attached to. Where now you get a Coke or something like that, people may be like, nah, we don't really drink Coke over here. We like our Doritos soda, you know, I don't know, I probably pronounce that shit wrong, but Doritos, they got the different kind of flavor sodas and drinks, and everybody has their different thing based on what you grew up on. But in those small neighborhoods where you got that zoning that's keeping those big box stores out, a lot of that culture is able to remain. So a lot of those brands survive in those stores, and those are more favorable to the store owner, because they're going to sell more of those at a better margin than they would Pepsi. They could probably get Pepsi, but Pepsi's going to sell less, and it probably cost them more to get it in their store. So they're like, nah, we'll stick with what the brand is that we've been working with for the last 15 years, you know?
For example, just to hit up on that again, right? So we're going to talk about another company that makes sense, right? And then we're going to compare them, right? So when we're talking about NVIDIA, ladies and gentlemen, I just want to give you guys the estimate of annual sales, right? NVIDIA is continuing to keep on blowing away sales, right? 19, they sold over almost 40,000 units, 50,000 next year, 60,000, 70, 75, and they projected they sold 80,000 units in 2024. So at this trajectory, over literally 5 to 6 year span, NVIDIA have actually doubled their inputs of chips that they actually are sending out. So I want you guys to think about what I'm about to tell you. So she said in New York, Mike said in New York, they got zoning, they have laws. Let's think about the chip space. NVIDIA is dominating, right? Then you have their competitors, AMD and Intel, right? We know Intel is falling below the waist. We know AMD is trying to hold its own, right? But I want you guys to think about from a consumer and a buyer standpoint. I don't care if NVIDIA is dominating, ladies and gentlemen. If I don't like their products, for me personally, I don't buy it. So I want you guys to think about this. Pepsi is not going to always have all the buyers. Coca-Cola is not going to always have all the buyers. It's what the consumer is feeling happy and what the consumer are used to. So you could dominate an area, right? But you can still have small products in that local area that can actually make what? Profit. So that's where you come in at and be innovative. They say, you know what? They only selling Pepsi products inside my store. I'm only going to sell Coca-Cola products, right? And you will have a fan base for that, right? So my thing is being able to see where the money is going, being able to actually create something where the money can flow to you would be a great advantage to you as an entrepreneur. right? So we know that Coca-Cola and Pepsi is dominating globally, but we got smaller brands that actually dominating as well. You know, inside Asia, they drink a lot of Coke, right? But we know at the same time they drink Pepsi, but we know at the same time inside Asia, Asia got their own brands and their own company that actually sell billions and billions of bottles of soda water and things like that. So it's always an opportunity, but we coming from a standpoint of understanding why the opportunity is there and why the opportunity won't be there. So next time you go to your local stores in your area, ladies and gentlemen, no matter if it's a local store, let's say a European market, Asian market, let's say an African market, let's say a Hispanic market, look at their brands, right, and ask questions, because I ask questions everywhere I go. That's how I knew Walgreens is going to be the expectation. I called my old manager. I said, how sales is doing inside the pharmaceutical? How sales in the stores is doing? She said, oh, sales in the stores pretty much what it's going to be, but the pharmacy is looking pretty good and things like that. Now, I want to talk about something before we get to some charts and before we get to some flow, and before we break down more products on Pepsi. I want to talk about something that's very important. I don't think nobody is talking about this, right? I want to talk about what happened. Did you guys know the DOJ just sued Walgreens? Did anybody know that? Did anybody know that? The DOJ just sued Walgreens. Did y'all know that? Walgreens was cheating and scamming. Right? I want you guys to pay close attention. A lot of pharmaceutical companies and people that's actually distributing drugs and sending these drugs out are actually in a hot seat. Pay close attention. So that means Walgreens should be on your list moving forward.
They said Walgreens was filling up too many Percocet prescriptions for people, man.
Pay close attention.
They were supplying the streets too much, man.
Yeah.
Walgreens was a drug dealer.
Right, and so they're being sued. So, ladies and gentlemen, that's very important. Somebody had their hand up. Go forward with your questions. We're gonna dive into some 2 or 3 tickers, and then we'll go from there. Yep. We're gonna dive into 2 or 3 tickers, ladies and gentlemen, and then we're gonna dive from there, right? We're gonna talk about some flow as well. And my thing is we'll save the tickets for last. I want to talk about some flow. All right, because flow is very important. I want you guys to see when the sweeps come in and when the block orders come in. All right. So I want you guys to pay close attention. I used to be a pharmacy tech there, so please pay attention to what's really going on. My thing is they're going to pay a fine because, you know, Walgreens is an entity, but if they need somebody to actually take the hit, they'll make sure somebody take the hit. All right. So
yeah, they're going to take the hit. The source supplier, which that's a whole other presentation for another day. They'll never take the hit. But yeah, I want to get into the, like you said, the charts. Let's open up some charts for the people.
Let's go. So my whole thing is I'm gonna share my screen, ladies and gentlemen, and let's lock in, and then I'll let Mike share his screen on a few stocks. I got a few tickers that I'm watching, ladies and gentlemen. So the few tickers that I'm watching, ladies and gentlemen, is WBA, you know, Boost Alliance, which is Walgreens, right, ladies and gentlemen. So my thing is I'm looking at Walgreens already on a 4-hour. She already tipped the scale because of the news already came out. So we had a fail 2 up. We got a 2-2 continuation to the downside. You guys know how I always say, you know, came up with something like the Wick theory. So if they want to continue this trend to the downside, ladies and gentlemen, if we break it below 1101, we know this trend is coming back down to 1004, 10 to 10 even. And if we can come back to previous level of support down here, it'd be 913. This is on a 4-hour time frame. But one thing that I noticed when I'm switching it to my 12-hour time frame, it's pretty much the same as the 4-hour, but we had a 1-3. Now we got a 3-2. So my thing is on the daily time frame, y'all notice anything? We had this fail 2 up. Now, the whole thing is we can continue this trend to the downside. I'm keeping my eyes locked in on it. Now, let's talk about Fibonacci retracement. Now, let's say you're looking for an entry. I got my fibs. As Ty would always say, if you're doing puts, we drawing our Fibonacci retracement coming down, and we're looking for entry below the 50%. If you guys are looking to trade the 50% as a threshold. So 1285, we broke that, ladies and gentlemen. So on Friday, we should have been in these trades. So let's say you missed the 1285. Our next fib is 61. 1275, you missed that. Our next one was 1262, you missed that. So now I'm looking at the low of the day of this candlestick is 1243. So if we come out from the bill Monday and we break below here, I'm taking this trade and I'm doing 13 and I'm doing $13 puts. I'm getting the money because I know that we can drop another 40, 50%, 60 cents. And if we drop here 1233, I get paid, but I'm looking to come all the way back down to these levels as we actually come down to this split. Now, weekly time frame on Walgreens, y'all can actually see what's going on. We was consolidating for a while and then we broke up some earnings. But if you drop this down to a 90-minute time frame, I want you guys to understand we had an opportunity to trade this. I'm gonna delete all this. Remember, I trade the 90 minutes and I love it. So on Friday, we got the 8:30, 10 o'clock came out. We dropped down, we consolidated a little bit. Y'all see this candlestick at 2:30. So that means when the news came out, this thing completely flushed to the downside. Remember, we talked about EMAs. We got 3, we got 5, we got 9, and we got 21. Y'all see how we below all of EMAs? So guess what? We know this was a complete what? Bearish what? Trend. Now, Mike, I'm gonna go to the order flow and I'm gonna type it in. I want people to understand that the order flow, all this correlates with each other, right? So once it loads up, I'm gonna show you guys the order flow and see if we had sweeps, see if we had blocks. So we're gonna type in WBA. All right, WBA. All right, here we go. You guys notice anything? Let's go down the chain. What time did I tell you guys that the market started falling? Look at the time. What time that is? 2:30, 2 o'clock, 2:30. So we're gonna go down. We're gonna see, hey, at 2 o'clock and 2:30, did we get any orders in? 12. All right, 1,400, right? So can anybody tell me 1,400 is 2 what? 214, right? So y'all see these orders that came in, we got what? Blocks. 150, 400, right? So guess what? Look at the strike price, 1250, 15. Look at the date. 417, 620. So remember what I told you, sometimes they are buying a time because they're anticipating on the move later on down the what? Down the line. Y'all follow me? Now, next ticker that I'm looking at really heavy this week, ladies and gentlemen, can anybody tell me? Is Meta. All right, Meta is on the horizon, ladies and gentlemen. I'm gonna delete all this. I want to look at Meta on a weekly time frame. Can anybody tell me what happened on Meta? Can anybody tell me what this sequence means? We got a 3, 2, 2.
Go back to Walgreens real quick. Go back to Walgreens for me real quick. So that Walgreens chart, you had the fib chart, the fib lines drawn up on there. Hold on, let me share this chart really quick.
All right, go for it. You should be able to share. Is it letting you share?
Yeah, there we go.
All right, let's see if Mike got a screen up. All right, there we go. Let's get it.
All right, so the fib retracement, I just want to see, I want to show you guys how this thing could line up for you with what I definitely know to be support and resistance zone. So this is the same thing, the Walgreens chart right here, and this is going off of the top level and a fib retracement. On the way down, like Coach was saying, he's looking for his entry and he's looking to get a $13 put in the money and ride the wave down. This is the weekly candlestick right here. Me, I'll jump in looking at somewhere like the 128. The 128 line on the fib lines up perfectly with this previous weekly candlestick. This is the top week of a candlestick. If I was just drawing my levels on my own, I would have put a level right there. So, you know, when you got skill sets where you could draw levels on your own, which I do have that and I teach that, the fib levels a lot of the times reconfirm a lot of my levels for me. So if I got my level aligning with a fib level, aligning with the EMA and order flow, the more confirmations you could get on the trade, the more likely you are to make money on that trade. So the more of those things you have lining up, the more likely you are to make money. A lot of people have trading strategies where if all 4 of their things don't line up, they don't take the trade. So you have people that are that strict on the trading. So you got to be careful and you want to try to line up as many things as possible. Just because it's a fib level and it matches with your price level, or it has an EMA and it lines up with a fib, maybe you didn't see any price action on there on the weekly or daily recently, so maybe it's not as strong as a level as you may think. But when all those things line up, you know you got a strong level going.
And that makes you got multiple things that line up, Mike. I like how you presented that because it's important for people to understand. You know what I'm saying? Because like I just said, the way we broke down Walgreens from two different perspectives, but my whole thing is now people have 2 different perspectives to go look at Walgreens, and let's say they have a different perspective. Now they got 3 perspectives on how to actually trade Walgreens.
Right.
All right. Now, what I noticed, remember I told you we went back to the flow. Now we do have Meta. Meta is high on my list because we don't know what's happening with TikTok. We don't know if Meta is going to acquire TikTok, but I think Apple would have been in a great position to acquire TikTok. So now Apple would have been in this space to actually deal with social what? Media. Got it? So let's go. Resume presentation. All right. So we got Meta. And then my whole thing is looking at Meta. I'm going to take it to the monthly. I want you guys to understand. Y'all see Meta has been in a complete uptrend since when? 2001. 22.
Take it to the monthly. I love the
All right?
monthly.
So I try to explain to you, we had a failed 2 down, and anybody can vouch for me. I told people they was online, said Meta is over with, right? Big conglomerate is online. It's dead, it's done. So they stopped people from being able to buy $88 and 108, right? So I want you guys to think about this from a financial standpoint of actually owning this long term. Don't worry about the price. Look at the return. Let's say you put 10 grand in. You made 661% on your 10 grand. Now you up 60,000. Got it? So if we are in a complete uptrend, if we fell down here, we had a failed 2 down, right? We know this is our what? Resistance is 384, right? If we don't get to that resistance, we got a resistance of 345. We broke all of these levels and we still have levels to go to. Now on the weekly time frame, I see that we got nothing but what? What we got, y'all? Consolidation.
A bunch of consolidation here, consolidation there. Consolidations followed by breakouts. Those are beautiful.
Right. So guess what I like to do? I would get my what? My box. I would draw my box and I know we inside the box, so I know I'm not trading off the what? The weekly. I got to go down to the daily and being able to take full advantage. Remember, we inside of a box. Failed 2 down here, right? 588, and then we came all the way back to what? 622. We had an inside at 609. Once we broke above 616, we went back to 625. Y'all follow me? This is the game, y'all. So now I want to take this based off the daily, right? I want to do my fib. Y'all see we got an outside, right? We got a 1-3. So I would draw my fibs coming up. And then once we break above the 50%, guess what? It's lights out. So guess what? 614.55, I can get into this position. I can do the 620 because I can take it all the way back to the what? My fib level is going up. Or I say, you know what? I am not going to exit until we get to the top of 624.
Right.
Now, on a smaller time frame, if we scalping it as a team, 90-minute time frame, I'll show you how you can get busy. All right. So we what? Support. This is Tuesday. 588, right? We got support. Now, I want you guys to look at this. Yep, Titus said he loved that outside bar a lot. Look at this, y'all. If we go back to the world of being basic, right, for traders, this is resistance, this is support, this is a cup and what?
The cup and
this is a bullish indicator. So if I'm seeing this, I'm realizing, guess what I'm doing right here? I'm drawing, I know this is what? My previous level of resistance, and we break below that, we know that we fell what? To the wayside. But guess what? We consolidate and we stand on this line. So now we looking for a retracement to go up, or we looking for a retracement to go what? Down. On the 90 minute, go for it.
Now go ahead. So for the entry, I want you to take the line up to the wick on that 2 up on the closest 2 up that we got. Yeah, that one right there. So now you could look at wicks on that retracement on both sides and say, okay, if it gets past my consolidation zone, if it gets above that price level, that'll be my entry now. If it gets below that other line down there on those wicks, that'll be my put entry, because that gives you more confirmation that the breakdown is occurring. So if you stay in the middle, you're not going to ever be short, because you're like still like, oh, is it going to go up? Is it going to go down? But those wicks right there are telling you that we tested up here, we tried it, and it failed. And now we tried the bottom, and that failed. So now next time we go up there, if we break above these levels or below, you could say, okay, that's a confirmation that I could jump in this put, or I could jump in this call, because we're probably going to continue breaking down to the next level that I had. So that's where you go ahead and you do your entry. So people that, I know a lot of people get confused with where to enter a trade, because you'll be in a consolidation and it's like, all right, it's consolidating. And then how do I know exactly when it's breaking out? Those wicks right there, they'll tell you, identify the breakout zones.
And then something I want to add. So if these wicks, if we get counted that turns into bodies above this, we know this is a strong indicator we going up, or a strong indicator that we going what?
Down.
Down. Now, if we going up, what level we looking for? Next level resistance. Y'all got it? Next level of what? Resistance. You got to continue to keep on going back so you can find your resistance. Now, if we go into the downside, what levels are we finding going down? Boom. Because guess what? We know this is pretty much a Marabology calendar, right? Now, I'm going to delete this and I'm going to show you guys something that I like to look at, right? We're going to go back to the daily time frame. I want you guys to notice, when we have trends, trends is our friends, right? To the upside or to the downside. Do y'all see where the banks came in and shorted this red triangle? The bank shorted it all the way down. Do y'all see where the banks come in and push it up? The banks went all the way back to the same level where they what? Shorted it. So the bank's traded inside of a what?
Mhm.
Zone. Y'all got it?
Some
The
people are
bank's traded inside of a zone.
man. That's a strategy. Trading ranges like that. People are good at. Some people, that's what their focus is, to find when the market gets into a range, and then they trade that range for weeks.
For weeks and weeks. So I got one more ticker, and then I'm gonna let Mike talk to you about the tickers, and then me and Mike can go back and forth with see who want to pull up a stock that they watching. But I want you guys to look on this list, and I want you guys to pay close attention to this. Oh my God. All right, now we're gonna go on a weekly time frame on Tesla. I want you guys to understand it. I talk about something that's called wick theory. Let me turn off for these EMAs. All right, let's get now. If the market want to continue to keep on going down, you see these two wicks, it would turn into bodies to the downside, right? Now, what y'all notice here, if in the strat world, if you guys use a strat, I use pretty much a lot of stuff. Now, if you use strat, what is this called, y'all? Put it in the chat and say it out loud. What is this? All right, somebody always said, he said in the group all the time. Ty said, this is a what? This is a what? What kind of candle is this, y'all? Talk to me. What kind of candle is that? We went up there. What kind of candle that is? It's a shooter. So it's an actionable what? What is it called? Actionable what in the strat world, y'all?
Actionable signal.
Actionable signal. Now, talk us through this. Now, what makes sense on this, and why would you take this? Y'all listen to this.
Yeah, whenever you have an actionable shooter, an actionable signal, especially a shooter, a shooter is literally telling you, normally it signifies a bearish reversal. So you're looking for downside. It doesn't always have to work out. We understand that the stock market is probability. So no setup works 100% of the time. But when you see a shooter, you should already have in your mind that, hey, we may get a bearish reversal at this point. So we're looking to play the bottom of that shooter. So you will be putting your entry at the bottom of that shooter.
Beautiful. Beautiful, beautiful. Look how that played out perfectly.
Boom. and we already know once you play the bottom of that, you got extreme downside. We went from all the way from 417 to what? Let's bring this candlestick up, right? This is very important. To 373. Wow. Y'all got that? Almost a 40 point move, right? Now, I want you guys to notice something. This, like he said, this is a great trade. Y'all want to notice something here? So I play something that's called wick theory. Once I see a wick like this, ladies and gentlemen, there's no body on it. I know this is going to be extreme what? Sell-off. And what happened? Extreme sell-off. So once we broke below the body, I know this would have been my first target. This would have been my second. We reached our first target, so we should have been exiting this what? Position.
That's right. Don't be greedy. That's where greed comes in, because now what you're going to look for, people start looking for that next bottom wick on the following now. Oh, what's the next level down? I could possibly ride it down to that way. And that's when you get caught up in reversals, because you're underestimating the power of that consolidation that took place before. And you're going to say it's easy to break through. Don't ever anticipate a level, especially if you're drawing it on a higher time frame, that is going to be easy to break through.
Nope. It takes time, and it's not suitable for everybody, because if you look on a daily, man, what we saw is an opportunity of a lifetime. Like, we did take shorts Thursday from the Bell as a team. But look at this, y'all. This is the 13th. This is the 14th, 15th, 16th. We inside. Y'all see once we broke above 24, y'all see where we went all the way up to 40. That's a monster move, ladies and gentlemen. Y'all understand that from Thursday to Friday, this is a monster move that gets you paid. So remember, if I'm saying taking a trade from the Bell, I'm already looking at the high from the previous day, and I'm looking at pre-market. Once we break, I'm taking the
Those are those 200% plays that people want to look for all the time. That's what will get that to you on that type of move right there.
Yep. So can you say that out loud for us, Ty? What you just typed? Y'all listen to this. This is important. Y'all listen to that.
Yeah, I said to hit on what Michael was saying earlier about drawing his own levels. Like, when you have your levels drawn, or like we just talked about the levels here, they always say look to the left to get your levels. You should always sell in the strength. So, as your stock is approaching the level, you should be trimming. You should be taking some profits. And if it breaks that level, you can continue to look for that next line. But if it pulls back up to that first level where you took profit, you should be exiting that position, because it's already going back against you. So, you know, yeah, you might want to say, hey, I'm gonna stay in. I hit target 1, I'm gonna go for target 2. But if it happens to pull back up and gets back to your first level, you should be exiting, because at every level, we know that's a prior resistance or support area. So, you know, we need to be taking some profit and selling in the strength.
Yep.
Last one, Mike, and I'll let you got it. All right, now, Target is one of my favorite tickets to trade. I think it got this. I think Target is a great store. Some of the things overpriced, yeah, I can agree with it, but the environment is good, the products is quality. But man, I want you guys to really look at this, right? Ray Charles can see this, and you brought him back from the dead. Y'all ready? All right, now we got a gap to the downside. You know, we like to fill what? Gaps. So we gapped out, we found what? Support around 120.21. Y'all see how we ranged all the way up and went back to 143, and then we got back down. Now, me personally, I've been trying to tell people to get in this trade for a while, but in the midst of seeing this, we had what? Resistance, we had support, and we formed the cup, and we inversed, and we came down. So we found support again. So I said, hey, if we're gonna find support again, earnings is coming up, right? Can anybody tell me, what do y'all think they're gonna do for earnings? Opportunity, March. So we swinging what? 3 to 6 month contract. So because we want to be able to take it back to fill this gap here, and then we want to take it back to fill this gap where? Here, so we got multiple gaps. Now pay close attention. I'm gonna zoom in, I'm gonna drive my fib, and I'm gonna come up to the top of this candle. Now, do y'all see I got entries, right? So if we just using the fibs, we know that we should be getting this card not above the 50%. That's too far out. I want to get in at my 0.23 fib, 129.25, or I get in 130, 130. If we got in here, y'all see how we got a phenomenal run back up to 133. Y'all see how we're closing this gap. And then on the daily, what do we have? Can anybody tell me, what is this candle on the daily? What kind of candle is this? Can anybody tell me? What kind of candle is it? And what this candle shows you? Talk to me, y'all. This is important. You got to know candles. You got to know this. You just can't get into trading because you want to make money or somebody online is making money. Once you learn it and you master it, you can make money for the rest of your what? Life. We got to fail 2 down. We knew this was an opportunity, and then now we got to have it. Y'all follow me? This is the game. So guess what? We got gaps to fill to the upside. I like this trade, 3-month contract. Take it out. I like the 140s. You can do the 135s, and you can do the 130. It depends on your level of what? Capital and understanding. Because if you take this back on a monthly time frame, I want you guys to look at this. We got a 2-1-2. We got a 1-2. We got a 2. So my whole thing is let's cover the top of this range. Right? Because we already creating what? Lower what? Lower highs. Y'all got that?
Mm-hmm.
So we are trending up. So my thing is giving an opportunity to actually cover this what? Gaps going back what? Back up. This is going to be one of those trades where we're going to be on live. Everybody's going to be rubbing their hands like Birdman. 10, 15, $5,000 trade. And you're going to be like, wow, I didn't spend $300, $400 to get it to the contract because we traded it on live one time and everybody made 1,000%. So your 700, we had a guy, G 700, turned it to $7,000.
Yep.
All right. Now, go ahead, Mike. You can share your screen. Mike got a few charts. He's going to show you guys what he's looking at. And then you guys on live, we'll have time for 3 people to see what chart they're looking at. And then open it up for 3 minutes for questioning.
All right. Let me share my screen. So, hold on. I want to take you guys through some levels real quick.
Put your screen back up, Mike.
Oh, I got you right now. Oh, here it goes. All right, so these are some price levels I had put out before this prior week that had just started. These are my price levels for this past week. Now I'll show you SPY because we made some good money off of SPY this week, even off the Qs and Nvidia as well. But I'm just going to go through SPY. So I just wanted to show you these price levels. So we got the price level 596 is the call entry on SPY. and 580, 590 was my put entry on SPY with 599.43 as a target number one and $600.23 as target number two, right? So we're going to go ahead and we're going to go to my other screen really quick.
I like that. I like that layout.
I like it. So yeah, I can see those prices. And then we're going to look at the SPY chart over here. Let's look at SPY. And let's look at those price levels that I was talking about. Don't mind me, I got a lot of levels. Don't mind all these lines. I got a lot going on in these levels sometimes. So, as I told my group, I said 596 would be call entry for SPY. So this is a daily chart. We'll go to the 4 hour. Let's just look at the 4 hour and see how this plays out for us. 4 hour, actually go to the hour so you can see it then. So let's say this was Friday. This was Friday. Boom. I set my price levels. Once I set my price levels, I set alerts at each level. My call entry and put entry level, you got to have alerts set. So I always set my alerts at call and put entry level. So that morning, when we woke up Friday morning, the alert went off from pre-market. I was getting alerts that SPY was flickering above and below 596. So immediately, I know I'm coming to the group. Hey, guys, we're getting a trigger. We're getting an alert on our SPY price level that we had set from early last week. Let's go ahead and get ready to make a move on this. We already got our support. We already got the entry level. And now, based off of this previous day, we got a support level that we know we could play down to 594.36. So 594.36 is where we will stop out. If we get down here, we'll stop out down there. And then if we get above to our take profit, 599.43, that's what we're looking for. Take profit around target one, and $600.23 was target number two. So the reason why you want to respect your levels, and I'm pretty sure you guys can see it clear here, is that you make these levels off of macro time frames. You got to respect them because you can't always expect that breakthrough to happen. And when you get close to your take profit target, sometimes even when I get close, it doesn't even have to go above the line. Just me getting close enough. If I got my entry right at entry, just me getting up here was close enough for me to take profit and for me to get out that trade. I didn't need to see 599.43 break. And I also already had made over 40% on my trade. So at this point, when you say, all right, I timed my entry, boom, we got it, clean entry, boom, the target was clean. When I get up here and we don't hit target, some people want to see the target break before they take their profit. I say, if you don't get target breakage, what is your take profit percentage? What is your strategy in trading where you say, right, when I get to this price level, I'm going to take profit? For me, it's 30%. So for some people, they'll say, I'm good with 15%. I'm good with 20%. For me, I'm good with 30%. At this point, I already have made 30% on my trade, so there's no need to stay in the trade. And it already got near my price target. So let me go ahead and take my profit and get out of here. Some people want to stay in and test that level, and you're up 40%. And what will happen? You test the level and look at this pullback you got. By the end of the day, your contract would have been worthless again, especially if you got a contract that expired within the week. And that's the importance of timing your entry and exit, because you could have the price levels right, but if you don't time your exit right and you're hitting near your price level and you don't time your exit and you get a rejection, right here, you're back to square one. All that 40%, all that hard work you did for the first 3-4 hours of the market and having your level set is going to be taken right away before close. And now you want to swing it through the weekend, right? Because you're like, well, listen, yeah, and when we open up on Monday, we got a good chance of retesting this and breaking back through. But you don't know that. We can open up on Monday, we can open up back below 596. And now you're asked out because your contract expires next week on Wednesday, and you bought it this week Wednesday or this past Monday. So I just wanted to show those and show how important setting those weekly. I mean, I set a lot of my levels off of the weekly. So a lot of these levels that you'll see me set, you'll see, look, 596. I got that from this weekly level back here on November 18th. That was the top wick of that week. So boom, easy setup for me. Boom, that's an entry. And then the wick back here, 599.43. I timed that based off of this wick right here, off of the week of November 4th. And I saw there was also support here from the week of November 25th. And then we had a wick off of that same level last week. So you just know 600 is also a psychological level combined with that weekly level. And like I said, the more confirmations you can stack on top of each other, the better chance you have of success. But that's my SPY breakdown. That's what I have as SPY for you.
And success takes time. Okay, we got time for 3 charts. Anybody out in the audience, give me a stop, and let's rock and roll. 3 stops. All right, I'm gonna look at them on the screen. Give me the 3 stops, 3 tickers. All right, time frame. Tell me what you see. I'll pull it up. 3 tickers. All right, you can type it.
You can pull up Riot.
All right, Riot first. Riot is the first one on the docket. I love it.
You can do it on the weekly.
Weekly.
And then on the month. We'll start off on the month and then go down to the week.
So what we see on the monthly, we got a 2-1-1. We got a 1-1 double inside on the month. I like it. I like for us to break the high of the previous month, which was December. If we can break above that, we in good graces to go back above 1585. So my thing is, in wick theory, I want to explain something while we are here. We didn't get a continuation on this wick theory. This is actually a fail 2 up. My thing is, it wasn't a body, so we know we came down. We dropped all the way from what? 15 and some change, all the way back down to 10, below $10. So this is your opportunity to buy more long term and take more swings right back out. So I want you guys to notice something. This is a good ticker, B. Thank you for showing it. I want you guys to know it took us how many months to go up from here? 1 month, 2 months, 3 months. So once we fail here, you should be in what? Quarterly swings. Month to quarterly swings, right? To be able to cover these levels going back up. Now, one thing about Riot, it does mimic what Bitcoin is doing. So if Bitcoin is pretty much on fire, Riot is gonna what? Follow. Now, on a weekly time frame, let's get this off there. A weekly time frame, we got a 2-3 setup. So once we broke above here, 1305, we continue to keep running to the what? Upside. We Friday high, we had a 1443. I like it, but Brandon, you notice anything, ladies and gentlemen? Tell me if you guys notice anything. What you guys notice? You guys notice anything?
It's trading in the range.
Straight inside of the range. So once we get these pullbacks like here, and we get these pullback here, we should be buying, right? Long term, or we should be taking a monthly and 3 month swing, right? You can take weekly, 2 week swings if you choose to, but if you're looking to take it for the long haul, 3 months, quarterly swings or weeks would actually pay you long term. Now, the daily time frame, we were smoking, right? We had this fail 2 down here at $11, and then my thing, we came back and covered this resistance here, and then my thing is we hit at the top here. So guess what? This is a hard level of resistance we need to break. If we break that, everything is off to the races back to 1587. Got it? I like it, Dan. That's a good one. That's a good one. All right, anybody else? Ticker.
Riot. I like Riot too, man. I give you some oh, you just gave him levels on Riot. What you got? 1537, you said?
So my whole thing is we ain't taking no calls until we break above 14 flat, right? And then we take it back to the house on Friday. But I do, I'm in $10 and $15 calls for January the 16th, 2026.
No, got it. I got entry for me. I put the entry level, like you said, $14 is a great entry. Because when I look at the monthly, when I pull up the monthly 1437, we seem to have like triple wick. We have a wick on that 1437 line going back to April 2023. There's a monthly wick all the way back there on that same line, and it goes all the way across. You'll see now we wicked last month off of that 1437, and again this month we're wicking off of that 1437 line.
I like it. I really think we can come up here and complete this this cut and handle, right? Because the support is here. We do got major wick, triple wicks, quadruple wicks. So I think these wicks can turn into bodies, and then we can go from there. So if these wicks turn into body, we can surpass all these levels and come here because Trump is coming in office and he's going to be pro what? Crypto.
Yep.
All right. Companion mode, man. Can you turn companion mode off? Appreciate it, man.
I never seen it. What do you call it though? With that 14, if you look at the previous month too, a lot of times if you want to look for bullish breakout, I look at the previous month high, and if we get above the high this month, if we get above that previous month high this month, then that's also another signal you could take from Riot. So if we get above 1470, that could be another.
And another one I'm looking at, they do have earnings this week, ladies and gentlemen. I really love this actually exploding to the upside. I'm going to talk about how I talk about Verizon, right? So when we previously had support here, we created what? Support here. We got a fail 2 down. So my thing is on these field levels, We know that we got an opportunity to come back and cover the top of this field by 40. So I got $38 calls and $40 calls. And we come back and cover these levels coming up, we're going to be in the money, baby. And then my thing is, we do have a beautiful what? Can y'all look at this and tell me, what do we have? A beautiful what? Trend line.
I like
that. See that? We got a beautiful trend line. So my thing is the basic works. Just go back into analyzer. And then my thing is, if you look to actually do puts here, you did have a double what? A double top. So a double one, and we came back there and we stalled where? At support again. We always stalling around this level, ladies and gentlemen. So my thing is, we stalling here, and this is last January, right? If you look at January the 8th, this is what we stalled, and we pushed all the way up to what? January the 29th. So we can continue this trend to the upside. So we're looking for them to be earning. This will be our opportunity to take it up. But now, the reason I got in this trade, if you look at this trade on a 12-hour time frame, we had a fail two down at 37.59, and then my thing, we pretty much almost covered this candlestick going back up. Y'all see that? So my whole thing, this is bag drop. If you took this trade with me off the weekly pick, you already in profit. We bag and drop. So my thing is, I really want her to come back up there and cover this wick 39.70, and I really want her to come all the way back up there and cover these levels. So I like it. I like it. Somebody had their hand up. Go ahead for it. Go ahead. Somebody had their hand up. Ask your question, ladies and gentlemen. Turn off companion mode. That's kind of rude to come in a meeting and turn on companion mode. Raise your hand. Go ahead. Talk for it. Go for it, ladies and gentlemen. We got time. One more ticker. One more ticker, ladies and gentlemen. All right. No tickers.
AT&T.
AT&T. So all right. So I pull up T. Me and Mike will break it down separately so you guys can get a gist, understanding what we're doing. So I'm gonna take it out to the monthly time frame. What I see on AT&T, we had a failed two up. We got a 2-2 continuation to the downside, but we halted at the bottom of here, 2140. That's on that on the weekly time frame. We got a 2-2 bullish reversal. So we'll see how that pans out. But on a daily time frame, I love how it looks. We had that failed two down here. And then we got a 2-2 continuation. Then we created a 3-2. So my whole thing, we got a nasty gap to fill back up to 2266. And then we come back to the top of the range at 2318. And if we continue to keep on firing on all cylinders at 24. Now, what I want to show you guys when I talk about bank entries and trade, right? Banks came in here at the bottom. So my thing is they came here, banks want to come back to the same level where they shorted it. So we got a gap to fill back to 23, ladies and gentlemen. So be prepared for this to actually fill this gap back to 23. They do have earnings this Monday before the bill, the 27th before the bill. So be prepared for that. That's the opportunity like that. And we do have a cup and handle. Y'all got it? So cup and handle looks good. Let's see. We got support. Let's see if we can continue to keep on forming.
It's crazy. It's crazy that he had AT&T. I had them charted. I don't have the alert set on them.
Yeah, quick alert on, Mike. I got it on my other platforms and I got it set up so we won't miss it. Now, one thing I want to talk about, ladies and gentlemen, before I let people ask questions, is Walmart. I want to put Walmart on a 6-month time frame because all of us shop at Walmart. I don't want to hear no excuses. All right. My thing is Walmart was $3 in 1995. We hit resistance at 23. We came all the way back down to 1372. But I want to talk about the pandemic, right? Let's look at this. The pandemic was 2020, right? So here we go. What was the price? Anybody know? What was the price? Don't tell me. $34. Walmart was $34 a share, y'all. Y'all follow me? $34 a share. I was begging people to buy it here, and I was begging people to buy it at $39. How many last time you went to Walmart? I guarantee you spent over $39.
Didn't they have a split as well?
Yes, sir. So it was cheaper. So look at this. Went up here. 183% return. When the last time you spent at Walmart? We spent $183 pretty much in 3-4 days. Keep going now. Now, I'm looking at Walmart to reclaim their highs. Take this down to a daily time frame. We consolidated. Y'all like it? I love the consolidation, right? But we had a fail two down at 90.13. And then my thing, we broke above this red hammer, which is mine is white. And then guess what? We up and off to the what? Races. So keep your eyes on that 12-hour time frame. It's showing that we got a 3-1 setup. So we are still in the consolidation zone. So my thing is I wouldn't feel too comfortable, ladies and gentlemen, until we continue to keep on rising above this level. And then my thing is we can knock out these levels coming back up. Any questions on that? Any questions on that, ladies and gentlemen? Mike, you got any other ticket that you're looking at this week really heavy?
No, I can show Walmart though, because I made killing on Walmart. I got some Walmart long out calls. I called those out probably. I called out the Walmart joints probably like, I want to say October. I've had these contracts since, and I bought some contracts that expire in April this year. So back in October, I bought some contracts that expire in April this year on Walmart. I think I got the $85 contract. I got to look at them again. I just know they're up crazy. It's up like 300%. But it was pretty much up that way because of timing these entries. So if you look back here, okay, so this is August. So this must have been around the time I was getting that contract, right around here, because this is where all my levels are at. So you had this time where Walmart was trading around this $70 to $75 range. And this is where I was looking to get my entry at, either puts or calls based on which direction it broke. Now, once we got up here to around this, where are we at? Right here. Okay, so after August, once we got back above the $77 level, I knew that riding in calls with Walmart was a good play going into next year, to following year. Because everybody talking about holiday rally around this time, or we're going to have the holiday rally for the next earnings, et cetera, et cetera. But we always got to remember the earnings that we're getting in the holiday season is for the previous 3 months. It doesn't reflect the holiday season. So this next earnings report we're going to get from Walmart on February 20th, that's going to reflect more of their holiday sales and what they did during the holiday season. So we may get another boost around there that's going to push them over 100. But the entry, like I said, the entry was based off of this August high. We retraced below it, got back in, got it back above it at $77, the time to get in. And my original first take profit, that's why I have $80 marked. That was going to be my first take profit level at $80. But I saw good momentum behind it, and I said I'm in a long contract, so I'll just ride the wave out as long as it doesn't pull back below my entry level. And I just follow it up with a trailing stop. And my trailing stop right now is sitting at $88.93. But I moved this little red line up as my trade increases in value. I move my stop up with it. So you want to keep doing that, especially when you're in a long contract. Don't get caught up as the entry is the price where you can allow it to come back down to before you get out the trade, because you're in the trade for so long at a certain point that the data starts hitting your contract as well. So if you end up getting a pullback from here back to entry, that contract is going to lose so much value. You're not going to be neutral. You're not going to be at the same price you bought it at when you got in. You're going to be much lower. So that's why you got to put that trailing stop and follow your trade up. So as Walmart kept breaking out through these levels, I had a level at 83.25, and that was the main level because that was, I believe, the all-time high at that time. And then they had the earnings come out, and then they broke out from there. So now it's just psychological levels, because I don't have any high levels on Walmart from back here. As you know, you set your levels to the left. To the left, you see we don't have shit back here. So what are we setting levels off of? Now you got to go off of psychological price levels and then find whatever resistance and support you can off of the most recent candlesticks. So right now, the most recent resistance we got on the monthly is 95.96. So that's a level I could play off of now. But if we break above there, my next level has got to be psychological, which will be $100. So I'll say $100, we're probably going to see resistance, because when people see Walmart hit $100, some people are going to take profit and some people are going to try to jump in. So that'll be my next level after this, because I have no levels on the chart. And that's typically how I do my levels for stocks that are at all-time highs, or when SPYs that are all-time high. If I'm not already in the trade, like I am now with Walmart, when things break their all-time highs, I usually don't jump into a trade and try to trade it to the psychological level, because you just don't know what's going to happen. So instead, what you want to do is you want to wait for like a little pullback like this that just happened on Walmart. And now you got a resistance level to play off of. And now you know what support level could pull down to. So now I see this. I'm in this trade. I've been in this trade for a while. I don't want to lose that much profit. So that's why I got my stop at 88.81. Now it's from the low of last month. So now I know I got a monthly support level. I got a monthly resistance level. Now I feel good. Now I got a good gauge. I don't really like playing the psychological levels, but this gives me a good gauge. So now I know once we break 95.75, I may shed a contract and go down to one contract and just play the psychological level from there and collect my profit off the other four. So that's just the Walmart play for y'all.
Question. Question. When would you take your profit out? Since you don't have no ceiling really, well, you got a resistance from the previous month. Right. But you up so much, when would you take out? You would just let it hit your stop?
Exactly.
Kick you out.
Exactly. It's either gonna hit my stop and kick me out, or we're gonna keep pushing up.
You just gonna keep riding it out.
Yeah,
I like that.
That's what I've been doing these months. So I've just been riding the wave. I had no idea Walmart was gonna take off like this, right? So as I've been doing it, I just keep my stops at the previous month low. And because my contract is so far out in time, even with that pullback, it won't kill my contract.
It won't hurt you.
Yeah, you know.
So you over there rubbing your hands like Bird, man.
Yeah, boy. Every week I love Walmart. Like, what are we doing next week, Walmart?
Yeah.
And if this keeps rolling like this, I'll just extend this contract out until next year. I'll sell the April one and I'll buy April for 2026, and then I'll do the same thing again. I'll just ride the wave with them.
I love it.
I like that. So that's a great breakdown, ladies and gentlemen. This is we're gonna stop our presentation, stop live, and we're just gonna open it up for questions for everybody. All right, so I'm gonna stop the presentation, ladies and gentlemen. We're gonna stop streaming. We're gonna start recording, and it's open for anybody to ask questions. All right, so